fundsupermart.com.
Hello, Frederick. Where do you see natural resources equities going in 2012, and what are the catalysts?
Well, natural resources equities have underperformed recently relative to the commodities, and we think because of that, there are many opportunities right now for investing in the sector. Many of the equities we invest in are trading at very attractive valuations, and so we've been trying to take advantage of that and make further investments in those areas that we think look like they hold the most upside potential. Now, there is a lot of uncertainty around the world right now in terms of recession in Europe, slowing in developing countries, particularly Asia, and the still slow recovery in the United States. But we think most of these are already reflected in equity values. We are heavily invested in the energy sector, even though we see opportunities across the entire natural resources space. Energy equities in particular look attractive to us, and within those, exploration and production stocks and oil field service stocks, which do have operations globally, look quite attractive today.
From the valuation and earnings perspective, where do you see the best upside potential?
Well, we try to take a long-term view, so even though your question is focused on 2012, which is very hard to predict in the short term, we take a 3 to 5 year view. But because the stocks have been fairly weak and the valuations look attractive, I think they can perform well this year, and then also into the future. And one area we really like are oil field services stocks that are trading at some of the lowest valuations that they've ever traded at, far below average historical valuations. And at the same time, oil prices are quite robust and are driving increasing spending, which accrues to the oil field service companies. There's a couple overriding factors that are also important. One is that the United States is experiencing a renaissance in oil drilling and oil production that we haven't seen in 20 years. It really is astonishing the speed at which we've increased drilling for oil. This is benefiting the oil field service companies in the U.S., even though we are seeing some softness in the natural gas drilling because of cheap natural gas prices. At the same time, these technologies, which are often developed in the United States and then transferred into international markets, are something that we think will see drive revenues and earnings for these companies far out into the future, 3, 5, 10 years out in the future. So we're faced with something we find very compelling, which is a strong short-term environment, and then at the same time we have good visibility looking out longer term, which is really ideally what we like to see, combined with attractive valuations. So we think the oil field service stocks are one area where, both in the short and longer term, they can do well.
The European debt wall remains unsettled, and the potential of a recession in the region spikes global risk aversion. So in your opinion, how would the situation play out in 2012, and what are the implications to global resources investments?
Although Europe is a concern, it's more of a concern in terms of its impact on the rest of the world. Europe and the United States and OECD countries in general have been less of a factor for many years on consumption of commodities. So as long as Europe is not so bad that it affects Asia and other areas that export to Europe, we don't see it as being a major factor. But that's the question, is how bad is Europe going to be? We know it's in recession. The question is, does their GDP decline 1% or does it decline 3%? And because of that, that can weigh on the commodity markets. With that said, developing market consumption is much, much more important than Europe consumption or consumption in the U.S., even though the U.S. is still a very large market. So that is what we're really focused on, is are these countries like China, India, Brazil, countries in the Middle East, do they continue to grow longer term? And again, because we take a long-term view, we do have some short-term concerns, but at the same time, any issues that are created will probably create attractive buying opportunities for our long-term that will still benefit our shareholders over the longer term.
What are the risks of investing in global resources?
Well, one of the other risks we're facing with right now are rising costs. All of the companies are facing these types of things. So if you have a new project you're trying to bring online, the cost for the trucks you might use in mining operations, or even things like the fluids that you pump into the ground to produce oil and natural gas are going up in cost. And we're even seeing labor shortages in the United States for certain oil and gas operations. So this is a major concern, because what can happen is it'll squeeze the margin and make operations less profitable, even though you have robust commodity prices. And this is one of the things, one of the reasons why investors have been a bit more cautious towards the equities. It's not just concerns about slowing global growth, but that combined with rising costs, moderating commodity prices may reduce earnings, which is and then impact equity values.